guys, Talita Guerrero here, owner of Reiki Mortgage and also an investor with KK Real Estate Investments. I have Dave Luczkow here, who is one of my top producers. But the reason why I have Dave here today is really because we wanted to talk about the market. And Dave is not only a loan officer with Reiki Mortgage, but he has a ton of experience with the market in general. So tell me a little bit more about that, Dave, because I love your background, Wall Street and all that good stuff.
Thanks to that. I was going to say we got youth and experience. But I mean, some of my background, I mean, I've been in the real estate market since I got out of college and business school. So that was late 80s, early 90s. So I've been through a whole bunch of different real estate cycles. I've seen the commercial market go up, go down. In the early 90s, the commercial real estate market collapsed and almost brought down a whole bunch of insurance companies. And I was working in that market at that time. And then after that, I was on Wall Street, actually working with commercial mortgages on Wall Street, mid 2000s to late 2000s. So I actually left New York and Wall Street just before the residential real estate market collapsed. But I was working with all the mortgage products that basically caused the collapse. And the company I was with was an investor at that time and made a decision that they didn't like the risk. And so they closed the business.
Wow.
So it was probably a good investment decision, but it wasn't, but I was out of a job at that point. But so what we've seen is what usually happens with most cycles in the real estate market is it's usually caused by too much money coming into the market. And that ends up, you see prices going up. So people sort of get in their mind that real estate only goes up. In value. One thing with real estate is it's like the only investment you can buy with 3% down.
Yeah.
Or 0% down.
Right.
Or 5% or 20, whatever, right? So then what happens is if you put 5% down and the property goes up 20% in value, that's all your money. So your 5% just turned into 20%, you made 4 times your money.
Right.
So you're highly leveraged, right? So that's why when real estate's going up, it can get very frothy and people get very excited about it, right? And that's kind of what we're seeing now, I think, right?
Which is insane.
Yeah.
Too many buyers, not enough inventory is driving the prices way up.
Yeah.
And what do you think it's going to happen, truthfully, here?
I think we're very close to a top.
I agree.
What's different, we were talking about like what's different this time than versus when the last residential market collapse happened. I don't know if we're going to collapse again. I'm not saying that, but
I agree.
2008, 2010, the mortgage industry, which I wasn't in, and I think you had pretty much just started in.
I just started. Right?
Yeah, and but they were making really stupid loans, right?
Insane.
We call them
loans with like crazy teaser rates.
Right, no income verification. Right. They were just giving money to anybody who wanted to buy real estate. So what's different this time is the money isn't being given directly through lenders to buyers of real estate. We're not making stupid loans.
And that's why I think...
I don't think we're making stupid loans,
we're
right?
Not.
We're just doing the normal,
Right. And the thing is with this time around is that everything is fixed. So if you own a 2.5 interest rate fix and your mortgage is $3,000, but the price of rent is insane right now and your rent is $3,000, you need a place to live. Right. You're not letting your home go into foreclosure to pay the same in rent.
Right.
What happened last time is that your mortgage was $5,000 and it kept going up.
Right, because they were in adjustable rate mortgages or whatever they're in.
Crazy adjustable. Yeah, not like it is today. And then... people were leaving their $5,000 mortgages to go into, $1,500 in rent, which is completely different than what's happening now. Right. And I think that most people have refinanced during this last boom, which makes it really difficult for us to have a situation like we had at the last crisis.
I agree. Right. It's very different because people were buying houses that they didn't have the income for.
Correct.
They just put down, I make $100,000 a year.
And even if
stated income, like a stated income,
struggling to pay their rent, their mortgage right now, the rent is going to be the same amount, so they will have to figure it out how to make it.
Right, somehow you got to live somewhere. That's what I tell people. It's like real estate's not going away. We all have to live somewhere.
And that's the reason why I think, how can we have a crisis this time now? Will the prices kind of plateau? I believe so, with rates going up. Right.
Yeah,
I don't think that's going to be a bad thing because we need more inventory for our buyers anyway. So if there's less buyer coming into the market, the current buyers who are looking might be able to actually purchase a home versus now where they're, pretty much not able to, even though they got a pre-approval letter.
What I want to say too, what I think is driving prices so crazy high right now is there is a ton of money out there, but it came in the form of COVID relief because the government passed, I was looking up, I think there was a $2 trillion COVID relief package under Trump, and then another $2 trillion under Biden. Now, trillion, think about how much money a trillion is. It's 1,000 billion.
That's crazy.
Okay? So $1,000 billion
a lot of people
is out there in the economy times 4.
Right.
And a lot of businesses got money. And so we see a ton of cash buyers right now in the real estate market, which we never see. And so I'm thinking, where are these cash buyers coming from? And the only answer I can come up with is it's all these people, a lot of business owners in particular, got essentially free money from the government. And they said, well, why wouldn't I take $2 million? And now I think they're investing in real estate. So housing prices, right? Housing prices have gotten so high right now that the first-time home buyer is priced out. So in a sense, housing prices can't go any higher because the first-time home buyers just, they can't buy it. So that's like a cap or a minimum or however you want to look at it.
I like that.
Right? And
that
then,
makes sense.
and I think we kind of have to wait for all this COVID stimulus government money to be spent and invested. And
How long do you think that's going to
well, it could take a couple of years. It's a lot of money. It could take a couple of years. And
you
now
think it's taking a couple of years for the market to plateau?
Well, no, I don't know if we can go much higher, but I don't see, I think we're going to be in kind of I think we're going to be in what I call a crisis for first-time home buyers, because that's who we really work with in the mortgage industry. I mean, we don't work with cash buyers, obviously, right? But I think the first-time home buyers are going to be in a tough spot, particularly in the really expensive market. So I think we're going to see people migrating to less expensive places, as we've talked about. Like we've got,
I love that idea,
right?
honestly.
It's like,
and with COVID, I think it allows, we were talking about that during lunch, that it allows people to work. People that couldn't work from home are now working from home.
Right.
So it's just a
Right,
matter
so that
of
accelerates
people making the decision to make the change, just like I did, right? You pack up, you leave, and now you're in a state where you get so much more for your money.
Let's do a pitch for, where did you move to, Tilly?
Arizona.
From Massachusetts.
And you know what, Dave? I love it. This is a conversation we were having. Truthfully, the cost of education there, if you want to keep your kids in private school, you're going to pay half of the price for a private school for a much better education. Yeah. Everything else is cheaper there.
They're building
taxes,
too.
They're
building.
Taxes,
They're building too.
Real estate taxes on a $500,000 home, you're paying about $1,200 for real estate taxes annually. Here you're paying what, $7,000-8,000 in Massachusetts. So
no, you're right. Right, yeah. I mean, so everything's more expensive here.
It's just right now people are still in that fearful state where a lot of them don't want to move, but a lot of them already has. And I think that the market will balance itself out too, because the issue with the inventory, obviously it's happening everywhere, but there are states, because I mean, Reiki Mortgage is in 7 states, and even in different parts of the states, you can see a huge difference. Right. So it's more the urban areas that is suffering the most.
That are really tough to find houses in,
because there's a huge
so we could
shortage.
see, I think like if particularly talking about first-time home buyers, is if you think you're not going to be able to buy a house for the next 5 years, you're probably you might move. That's when the decision becomes, well, let's just move. Yeah. Because, it's a dream for everybody to own a home. And that's what we love about our business, is helping people get their first house or build that legacy within.
Moving has been a blessing for me. So
awesome. So it's different this time.
That's the market, very different.
But it's still a very difficult market, and it's going to be like this for a little while.
Yeah, and honestly, for those of you who are waiting, there's a lot of people watching the market and waiting for the market to crash. We don't really think that's going to happen.
It's hard to see a crash coming. We would need a severe recession, which, by the way, could happen. We've got war going on. I mean, a recession is what it would take to I think, to sort of have the market come down. But
yeah, as of for right now, I think we're staying exactly where we are. So move.
Well, moving it's a much more viable option for people now because it's so much easier to work remotely.
Absolutely. And, now, guys, subscribe and like our channel. And if you want more tips, stay tuned because we have more coming up.